Hello, I wanted to say thank you for the Zoom work sessions over the last couple of days. 24 teams met with me and I learned a lot about this project. The great thing about this project is everybody's doing a different company and everything's a little bit different for each company, as we know in this business. And so I learned a lot of tips and tricks that I wanted to share with you and help you prepare for presentations next week. I'm going to structure this little video lecture around what kind of questions you might get asked in the Q&A portion of your presentation next week. Strongly encourage you to make sure that each member of your team is prepared to answer the following questions. I could ask any member of the team, and if you only have one person who knows how to do it and they're unable to attend that day, that would be very awkward. Also, this guarantees that you guys are working as a team together. So regarding the original statements, and these are the ones that you compile directly from SEC Edgar, one thing I learned going through the individual teams is that sometimes the subtotal on those didn't work out to the lines above it. And I'm going to show you an example here. This is Chesapeake's income statement, and they talk about operating expenses, which they would lead you to believe add up to something called total operating expenses. The problem is, this year their total operating expenses were about $10 billion. But all of these line items called operating expenses only add up to about $3.3 billion. And so there's a lot missing there. One option is to go to the 10K and look at the statement itself. And on the income statement in the 10K, when we look at total operating expenses, we see the $10.1 billion. But this time we see enough numbers to actually add up to 10.1. Now this makes me question my tried and true approach of going to SEC Edgar to come up with the right statements like this. And so one of the things I'm going to ask each team is, was this a problem? Did you have issues where the file that you downloaded from SEC Edgar was not internally consistent? Have some missing expenses. And in this case, all that team had to do was either come in here and insert some, or on their restatement, just add them there, and just to make sure that on their restatement they had enough expenses that added up to a total that matched the total. That team did point out that there's a lot of additional information down here at the bottom in terms of other operating expenses, and I think that those numbers may be what's necessary, but I'll leave that to each team to work out. What I'm going to ask you in the Q&A is whether this math was an issue with your company. Another thing I might ask you is, if you did have to go to the 10K to look up any discrepancies, did they even add up there? In my Chesapeake example, they did, but I think in other examples, perhaps it was BP, you guys should check. I'm not even sure it added up on the published statements. Another question I might ask you is, did the depreciation on the balance sheet match that on the cash flow? A lot of you didn't have any depreciation on your balance sheet. You had to go back to the notes and find out where it might have been embedded. I think Apple's a good example. They put part of it in cost of goods sold and part of it in SG&A. And so I may ask you how those numbers worked out. You know that I will probably ask you about net interest. This is something we've been talking about for a large part of the course. A lot of companies just report net interest, and I will ask you about, did you break that into earned and expensed? I know at least one team insists to me that it's not in there in the notes. If that's your position, please let me know at least 24 hours in advance, because I'd like to have a look myself and find out if companies really are not reporting that breakout. I know of another team who apparently has no debt and therefore has no interest expense, and I think that's okay. Did you have to decompose the PP&E? So this is the corollary to that. This is on the balance sheet, and many companies just give us net fixed assets or net PP&E, and you have to go in and find the at cost, or sometimes it's called gross, from which you can subtract the accumulated depreciation. And or perhaps you were lucky and they gave you all three lines on the originals. That's a question I'll probably ask you. Now, regarding the work to restate this, one thing that became clear in doing this is we should expect to have to calculate our own cash flow statement. Let me pull up an example. This is Southwest Airlines. I believe I used this for the first video. These were my originals. Got income statement with balance sheet and cash flow beneath it. And then on the restatement, I've got income statement with balance sheet. And as we know, we want to create our cash flow statement, not from theirs, but from our income statement and balance sheet above. And when we try to do that with Southwest Airlines, it works out just fine. We start with the net income using our pro forma practice template here, and then add back depreciation to that net income. Then to adjust for current assets and current liabilities changes. When we look at the total of that, I get a total of 3652. But over here on the original cash flow statement, they had a total of 3987. So I need to plug that with an extra $335 million of cash from operating activities so that my total, when I calculate it here, matches their total. And so this was a benefit of meeting with each team individually. It became clear that this needs to be a part of our process. And guys, I've not found this process anywhere in a book, but we're working on this semester trying to get it as streamlined as possible. And your help is immensely valuable in that. And so an important step in this is going to be to put in a plug here to reconcile these two numbers. Similarly, when we look at cash flow from investing activities, all I had was an increase in fixed assets at cost because that's all on my balance sheet that I had to work with. But the plug that I needed to match my total here of 303 to their total here of 303 was immense. It was almost $2 billion. I would like you to at least talk to me about that in the Q&A and tell me, yeah, you noticed that was a pretty big plug, and see if there was any of these line items, if there were any of these line items. You know, this supplier proceeds kind of jumps out at me. You could go to the notes, find out what that is. Other than that, we had some purchase and sale of short-term investments, and they seem to kind of offset each other for the most part. There's a big difference in what they list as capital expenditures and what I listed as capital expenditures. So if you could just show me that you've thought about that. You don't have to reconcile every last dollar of that plug, but let me know that you looked into it. Offer any thoughts for insight that you may have. When I went down and did the cash flow from financing activities, used our model our template to see what that should be, I got 3083 versus the number that was published was 2990. So the only plug I needed there was 93 relative to our total there. So I felt pretty good about that. If you will do these plugs, then you have matched their cash. That ending cash should flow straight up on your balance sheet, should match the number up here on your balance sheet. 2548 is what they had shown in history when we restated it. And then down there at the bottom of the cash flow statement, 2548. If for some reason you still don't match, that would be a great thing to let me know about. So again, in your Q&A, it would be nice if you were prepared to discuss those three plugs and how important they were. The next thing I might ask you is, did you need to make any adjustments to depreciation on the income statement to account for the change in accumulated depreciation on your balance sheet historically? Same thing for retained earnings. Let's go back to this Southwest model and look at that. If I look at depreciation in 2019 for Southwest, it was 1.2 billion. And so if you look at our pro forma practice model, you would think that would be the change from accumulated depreciation from this year to the next. So if I said this minus this, I would expect 1.219 billion. But that's not what they published. And so I need to put a little fudge in here for that. We're going to call it a depreciation plug. Never seen this in a book, but by working with 24 teams this week, it's occurred to me that this would be a good thing to have in our workflow. At the same time, I'm going to insert a row for retained earnings. And so let's call this one a depreciation plug. And how would I calculate that? I would say, well, the difference between this and this minus a negative, so really plus minus this. And that's how far off we were. So now if I came down and changed this formula to this minus the sum of these two, I would hope that that would be zero difference. And it is. So my plug is correct there. And similarly, I want a retained earnings plug. Without it, I would expect my retained earnings to have increased by the amount of retained earnings on the income statement, or at least our modified restated income statement. We don't have retained earnings over here. I would expect it to be 1928. Unfortunately, it's not. It's off by about 50. So here again, I'm going to say, I don't need these parentheses, but hopefully they make it more clear what we're doing. We're taking this difference, and then we're subtracting that from this number, expecting 0, but getting a plug number. And so now if I say these two minus the plug, minus the sum of these two. So if my retained earnings would have been 1978, then that would have accounted for the increase that we saw on the balance sheet. I do this simply so that when we make the model here in a moment, we will have enough numbers on here that we can use the approach we learned with the pro forma practice file to get all these formulas working. We'll do that in just a moment. One last thing before we quit is these are formulas, which is dangerous, so I'm going to copy and paste as values. And now we won't mess them up when we move forward. Without further ado, let's take this and build a model out of it. So we want to keep this restatement sheet for future reference. Highly unlikely, but we could have made a mistake here. So let's call this restatement. Let's copy it and call it main. And in main, we don't want these values to refer back over here. Anything that's blue, we want to paste as a value. So I'm going to copy, paste as value. You're wondering why I got that extra cell. It didn't harm anything, and it just let me go faster to not spend the time to get just the 3 cells, which I should have done, but I didn't. So as you can see, anything that's blue is getting pasted as a value. Anything that's black is getting left as a formula. All these will be left as formulas because they're always looking at column J above. Make sure I didn't leave any formulas in my plugs here. Nope, they were all values. So I'm good. So theoretically now I'm not using column A through F, but let's check that. I'm looking at these and I see that the only formulas refer to something in H, not over here. If you delete these columns here in a moment and you get all kinds of refs over here, you'll know that you left a formula looking at those columns. Okay, I'm feeling lucky, so let's try it. Highlight these columns and delete them. And I don't see a lot of refs, so I must have gotten rid of all the references to those. And now I have a clean place that I can start to work on my model. I'm going to delete some extra rows. For the life of me, I can't remember why these are highlighted blue, so I'm going to undo that. And you might have something that looks a bit familiar here. It's got these 5 new rows that are really awkward. But they're, I did have one check cell there. They're necessary for to get our model to balance. And here's why, is because we can come in now, I don't know why those are not bold, we can come in here now, we've got formulas that we could carry forward into our forecast. So an easy way to get those cells out there is like this. So somehow you're going to use your 4-quadrant model to forecast your revenue and expenses, but then you're going to copy the formula forward for gross profit, and similarly for before tax profit. Notice I don't want those plugs there because that's going to throw off the before profit and retained earnings, or before tax profit and retained earnings. Let's get them out of the way and just keep them down here for reference. I moved those down here because I don't want them to affect before tax profit, net income, or retained earnings. I do want them visible because when I ask you during your presentation, did you have a plug required to make your depreciation on the income statement match the change in accumulated depreciation on the balance sheet? Then you can say, yes, we were off by about 262, and if you're an overachiever, you can tell me why you think that was and why you think this was off by going through the financials. If you're just trying to get through this project, then just note the difference and we'll move on. But we should be able to copy these formulas forward, these formulas forward, these formulas forward, and so on. Everything else here, everything that was blue, you'll need to use your 4-quadrant forecasting to do that. So imagine your golden crosshairs here, like so. Similarly on the balance sheet, if you calculated your net fixed assets because you were given cost and accumulated depreciation, then make them bold and black. Some of you were given net fixed assets and you went and looked up accumulated depreciation, and then you subtracted the two, added the two to get fixed assets at cost. And that's fine. In that case, you'd probably want to make that bold and black and carry it forward. And you know how to forecast the balance statement just like you did on the pro forma practice. Now, since you've created your cash flow statement from above, you should be able to set the cash equal to this number and it not change. So that's in 72, D72 equals D72. Doesn't change. It is a formula. It's a blue bold formula because it was historical, but we calculated it, so I guess it needs to be black. We're not able to calculate this one. We could use the teeter-totter method, I guess, to calculate that one. Make sure we get 1854. Not sure what good that did us other than to convince us that it was in balance. It's this method, it's the cash flow statement method that we want to use to forecast from here on out. And so now we have cleaned it up and we have something that looks very much like our pro forma practice file. We could even probably carry these forward, although it's going to start to give us errors if I keep doing this. And as you fill those in, you'll be building out your model, getting the right answers, and then you can add the cash flow calculation, getting down to net equity directly from the pro forma practice. One more thing I want to say before this video is over, and that's about what I'm going to call revenue build. The simplest way we've done revenue build in this class is year-over-year increase in revenue. And that's fine. If that's where you need to get to with this, that's fine. If you want to build that out a bit more, let me say with your dashboard in mind, you may want more than revenue up here. You may want a whole section of this thing called operations. Well, let's just call it revenue build. And you may be selling widgets and have a price per widget. And maybe that's an easier way to, or a better way for you to tie your dashboard to calculate your revenue. So if I sold 11,000 widgets at $2 a piece, then really this would be that times this. And if my dashboard, I didn't get it quite right, but you get the idea. If my dashboard were going to have widgets and price per widget on it, then I would need some section up here to build that revenue. I don't care whether you do it here or whether you do it down here, whatever works the best for you. Somewhere, and that's why I like this section up here, you're also going to need a capital expenditure line. Now, theoretically, capital expenditure is the increase in assets at cost. It won't work for this year because I didn't have enough history in this model. It should work for this year, but they actually had a write down or something and showed negative capital. So with Southwest, it's not helpful for me to try to get historical expenditures, but I could certainly do it going forward. I could say we're going to spend $1 billion this year, $2 billion this year. I don't actually think Southwest is going to be spending billions of dollars in capital, but if they did, then going forward, think about how that would affect your fixed assets. Your fixed assets at cost would be going up by the amount of capital that you spend. If that concept is strange to you, grab your iPhone, your Samsung phone, and text me right away, because you should understand that whatever capital we spend is what's driving this change in our fixed assets at cost. So that should be very normal to you. Your accumulated depreciation, of course, should be this plus this negative number up here for depreciation when you decide how to do that. Probably what you're going to do is say that depreciation has been running some percent of, I like net fixed assets. The author likes at cost assets. For your project, I'm good either way. But once you've forecasted that depreciation, add it down here to get accumulated depreciation. Since we're this close, I will press ahead and talk about dashboards. So we're going to want a dashboard up here. And I have had the question, I actually got it while I was recording this video, of how is this thing supposed to be laid out? Do we want to keep this stuff in our model? No, we don't. We want a restatement where we can refer to it, but as I did in this video, we want to come back to main. And then what I like to do is put a little narrow column in there because you'll see here in a second, I don't want column A to be as wide as this. Copy that, come over here, paste my column width, paste special, and now I have an area that I can call my dashboard. If I make it gray, I can come in here and leave off one row and one column. Pick your favorite color. That's mine. Don't pick that one because it's my favorite color. Now we have to get this to 16 by 9. You'll notice on the rubric, I believe it's called, it said 16 by 9, and here's why. When I go to PowerPoint, I want this to paste in nicely on a 16 by 9 slide. If I make sure that my slide size is 16 by 9, then when I paste that dashboard that I just copied by going to paste special as a picture, if it's exactly 16 by 9, I'll be able to hold the control key and expand this to fill up the entire slide. And when I let go, I'm a little bit too wide for the height. For a guy who turned 50 last week, so what I want to do is come in here and either insert some rows or choose a couple of rows and make them taller. If I would insert them, I would probably have more freedom to place place cells on the dashboard the way I want. So I will insert about 3 rows, copy, delete, paste special, picture. And I got closer this time. If I wanted to take the time, I could insert a couple more rows and see if this thing would exactly fill up the screen. It's pretty close to 16 by 9 right now. I hope this is helpful. This has been a bit more of a lecture, and so a lot more clunky than videos that I spend a lot more time on. So I expect some questions. Feel free to ask, and I look forward to helping you through the remainder of this project.